سلام بچه خوش آمدید در چینل حسین 5000. امیدوارم که جور و صحتمند باشین و امروز هم ما سعی میکنیم که یک چند تا کلمات جدید را با گوش دادن با اخبار با هم یاد بگیریم و سعی کنید که چینل ما را اگر تو هنوز سابسکرایب نکردین سابسکرایب کنید تا از ویدیوهای بعدی ما را از دست ندهین و وقتی که ما ویدیو آپلود میکنیم ازش با خبر شوین. legendary legendary caution caution incisive incisive dilemma dilemma relative relative defensive defensive irrational irrational determine determine assets assets prospectively prospectively aggressive aggressive this market evolved this market evolved injecting injecting liquidity liquidity yield yield sufficient sufficient equities equities contributes contributes treasury yields treasury yields absurdly absurdly elevated elevated rate rates
Joining me now with more is legendary investor Howard Marks. He's the co-chair of Oak Tree Capital Management. You're known for your caution, Howard, and your sort of incisive view on the market. So tell me about sort of your own, I don't want to call it a dilemma, but reflection on what's going on with stock prices and interest rates here.
Well, Kelly, it's great to be here with you today. Look, stock prices are high relative to earnings, relative to history, and we see signs of risky behavior in the marketplace on the part of people who are trying to get a good return in today's low return world. So there are negatives, but that's not enough reason to take defensive action. There are also positives. And the greatest positive is the strength of the U.S. economy at this time, and strength that will probably last for at least another year. So I think that the two things are in balance. The other thing is that a bubble is an irrational lift in the stock market. Today's levels are not irrational. They're ultra high because interest rates are the lowest they've ever been. Interest rates do a great deal to determine the pricing of assets, and when interest rates are low, the returns on assets prospectively should be low in line, which means that the prices will be high. So I think this is not a time to be aggressive, but neither is it, in my opinion, a time to be highly cautious.
In saying all of this, Howard, has your own thinking on this market evolved? Because we've been in a period of very low interest rates for a long time, and they just keep sinking. I was just reading some research about how low real rates are and how they're likely to stay that way for everything from the Fed keeping rates lower than normal to a supply-demand imbalance for treasuries and that kind of thing. Is there a new playbook now?
Well, Kelly, for months, if not a few years, the mantra has been lower for longer. The Fed wants to be supportive of the economy, and the main way they do that, in addition to injecting a lot of liquidity, is by keeping rates low. The real question is how long will they be able to do that? number one, if they keep rates low, they risk the economy overheating. Number two, if it overheats, we risk having inflation, higher inflation. Number three, if we get higher inflation, rates probably have to go up because people will not buy instruments, debt instruments, to give them negative real yields. And number four, if the economy overheats, then the Fed will have to raise interest rates to cool it off. So there are lots of risks. It's not sufficient to say, well, the Fed wants to keep rates low. We know it does. But on the other hand, we're starting to hear, as they say, they're thinking about raising rates a little, and I think that's in order.
So let me ask you, I often ask about stock prices, but really you guys invest in credit. So we've seen a lot of headlines over the past month where yields on junk or high yield debt was below the inflation rate for the first time ever and that kind of thing. But many people point to how strong credit markets have been as a source of support for equities, whether it's financial engineering, share buybacks, you name it, that's kind of part of what contributes to the bullishness out there. But are these prices rational to you, the levels at which companies are able to borrow?
They're rational relative to the level of interest rates. Let's say high yield bonds. High yield bonds today yield around 4%. And the 10-year Treasury yields 1.2. So that's a spread of 2.8%. And that's low, but not absurdly low. So I think that most assets are selling at prices which are fair relative to each other and relative to interest rates, just low in the absolute because interest rates are so low in the absolute. I should say the prices of assets are high in the absolute because the interest rates are so low in the absolute. So I don't see anything, any large asset classes that seem ridiculously overpriced relative to other asset classes and relative to interest rates.
Right.
It's just that everything is elevated today.